Hello guys, welcome to Highest Forex. This is African Rebel speaking. This is where we guide traders from foundations to freedom. In this video, we're going to talk about trend lines. We have been talking about trend line here, but we're going to talk about trend lines in a more, profiting way, and also give you or implement some entry criteria using the trend lines that will help us in the coming year to be, better traders. So, without wasting much of our time, before we dive right into game, let's appreciate you all, man. You are doing the most for me. Thank you for the subscriptions. Thank you for the shares, for the like, the comments. I sincerely appreciate. And for those of you who just come to enjoy our content, bro, you have to subscribe, alright? Subscribe, man. Come on, subscribe and put us on post notifications so that each time we drop any content on here, you can also enjoy it and learn from it. Let's get started. So, people, this is BTC USD, and then as you all know, I don't like to keep things complicated, and I also don't like to keep things complicated. Right? I don't like to keep things complicated. I like to keep my chart easy, simple, and the same rules, bro. Like I said, trend line again. So it is the same thing. As a trader, you don't need a lot of strategies to get you on the board. You understand? You just need one thing, just one thing. Try to understand the correct way of using that thing. That is all you need as a trader. So we're going to break down BTC, and then I'm going to explain some important terms to you guys and break down some stuff to you guys to understand why sometimes you get stopped out of your trade, sometimes you get a lot, bro. So let's get into it. Now, my way of analyzing is the Falcon way of multi-time frame analysis, right? But I like to go from the daily, not the weekly, because bro, I'm not a swing guy. You understand? I'm a day trader. I love to day trade, but I still like to go from the daily unless my day on unless I have done that maybe before the week commenced. But when I'm on my chart for the first time, like looking at the chart, I like to go from the daily down to the 15 minutes and probably the 5 minutes for the entries. Now, the strategy I'm going to teach you guys using the trend line today is going to talk about the trading. The day trading is going to be based on the 15 minute and the 5 minute. But I will not just leave other time frames to go for them. Now I'll have to understand the whole direction of the chart from the daily time frame till the 15 minutes. Then my trading will be between the 5 minute and the 15 minute. So the 15 minutes will be the one I will be using its own direction more as for my directional bias, and then I will be using the 5 minutes for entry confirmations. So from the daily, and you already know my rules, right? You have to look at the current structure, the current pattern you have. That is going to be your focal point. Now we have a lot of things. Even if I'm to, like I said before in some of the videos, if I'm to compress the whole chart is actually a pattern, right? But I want to be on the current side because I know that the current market is what tells the future, right? So this is the current part of the market, and now what I can see on the current market, or what we all can see clearly, is like we are having this kind of a bearish correction here, like a bearish flag sound, because we have this impulse to the downside, and then we have been stuck in this flow. Yeah, you understand? So we have been stuck in this, so it's like a bearish flag thing that's occurring on BTC USD right now. But I will not just use I will not just assume it's going to be a bearish flag until I begin to break these things down by myself to see for real what it is, right? So now, like you all know, we have gotten our correction, we have understood where the impulse is and where the correction is. So the next thing we do is to look at where is the highest point of our correction and where is the lowest point of it. So this highest point and lowest point are the places we put our swing the real lines, like which we call anticipation lines. These are where we put them. So we put the real line at the highest top point of the correction, and the other one at the lowest point of the correction, right? So this is what we have on the daily. This is the highest point and the lowest point. So since we know the market is leaving this end, we have to be targeting the market to come to this end. That is literally what the both of them are saying. That is literally where we use, or where we care about support and resistance, because this is a supportive area, this is a resistive area. Like I said earlier, I said I'm now here to show you trend line again. Yes, we keep doing the same thing, but we want to make sure that you understand how to do same thing correctly all the time. Because trading is fucking easy, bro. Trading is for you to keep repeating what is working. That is trading. Keep repeating what is working. So this is what we have on the daily. Yes, we can see swing points. Yes, if we want to connect, it can work, but we have to make sure that what we are connecting is real. So we have to go to the 4 hour. Go to the 4 hour, and then we see further into the market or into the picture. Because the lower you go, the more you see. So we have to just adjust for accuracy. Now we can see very well that, like I said, always focus on the current side of the market, right? Now this is an impulse downside. It only have this swing, a little bit of swing this high here and then having this low. So I won't call just that my current pattern here, because it's not yet a pattern. It is just an impulse, and then so it's only having this little retracement. So it's not clearly a pattern yet. I can't call it any of the patterns, right? Until if it's formed well. That is for this time frame though, because when you break down the time frame, you see definitely it's having stuff in it. You understand? There are trends within the trends, correction within corrections, there are patterns within patterns, all of that. So now, if you look very well on this chart, right, a lot of traders will get to connect it like this. A lot of traders will do this connection like this. A lot of traders will do this connection like this. Which, yeah, is not, I can't tell you, like, if you see it on the chart, you will not, you can't, you don't have the right to tell them no, they are wrong. You don't have the right to, you can't just tell them they are wrong, because, yeah, it is making sense. It's clearly making sense, but there are things you have to understand so that you can help yourself to make better sense. You understand? You have to help yourself to make better sense. Now, I always talk about impulsive correction on the chart. I always talk about impulsive correction on the chart. Now, like I said earlier, from the daily, we had the whole of this to be like a bearish or flag, right? Now, impulsive correction, if you look at this ends very well, this is now looking like an impulse in this time frame, right? We had this impulse to the downside, and then we also have the same momentum to the upside. So since we have the same kind of momentum to the upside, it is now an impulsive correction, because this was a correction, right? This is the whole of this place is a correction. So the correction is supposed to continue, but it is now giving us impulsive corrections within the correction. Like they are supposed to be corrections, but they are now impulses, right? So instead of connecting from here to wherever the way I did initially, of which, yeah, that is what most of you guys will do. This is what I will do, because I know that this is a correction. This is an impulse, right? And then this is now a correction. This is now the correction I'm having. We have, if you watch the video, we talked about patterns, right? Chart patterns, the reversal and the continuation patterns. This is a running channel, which is clearly a reversal pattern. So on the 4 hour, we are having a running channel. So this is what I will have instead of connecting from the base. 1, 2. And then this is where we had 1, 2, 3. That is now causing the break of the supportive trend line. So now, instead of leaving my support to be here, I have to evolve my support to be this place, which is the 90% of the running channel structure we have. That is the 90% of it. So this is what we have on the 4 hour. That's why I said you have to dive down the chart, the time frames, so that you can get to understand what's going on. It is the current pattern that tells you the market, not the past. It is the current pattern that tells you the market, not the past. The past is gone, but the current tells you the future. It is like normal life. It is what you do right now that determines your tomorrow. What has happened, bro. You can't change it, in it. So let's go to 1 hour, and then we'll see what's going on there. You have to always remember those rules. They are simple, but they are so complicated. And it's why this is the market, bro. Human beings, like, we're not made to be traders, because too much emotion and things. We are disciplined. To be disciplined is hard, very, very difficult. So now we are on the 1 hour, and then what we do is to look at this. Now the information we have gotten from this is that no matter what we do, we should always try to channel our mindset that we are supposed to sell good to what, 90% and maybe below, right? So this is the 1 hour. Like I said earlier, it was looking like just a little bit of correction, but when you go down the time frames, they are all making sense. When you go down the time frame, they are all making sense. While I was coming up, I was told not to look too much into the lower time frame because they are noisy. They are not noisy, bro. They are more informative. So let's continue. So this is the 1 hour, right? We're having the 1 hour right now, and then clearly already we are going to do this, and it's very very correct. This is what we have on the 1 hour. We see the market rejecting from the second touch of the trend line. This is what everyone will do, and then we are anticipating the market to come back to the third touch, and then we drop from here, right? This is what we all gonna do. So now let's talk about the entry criteria, right? So using this trend line is like is the basics of the whole thing if you are a pattern trader, unless you are doing SMC or you are trading with the indicators. But if you are a pattern trader, then you should know that using the trend line, know that you have to connect the trend line here. You have to evolve your trend line. These are the basics. These are the basics. So if you don't understand them, you have to wake up. You have to really wake up. So this is now the market is rejecting from this level. How would we have taken this entry? How would we like be in this buy? How, you understand? How would we have taken this kind of entry? So this is where the criteria entry comes in. After BTC, I'm going to talk about Euro USD, and then I think we look at one of the synthetic index and we are done. So this is now we go to the 15 minutes, right? We go to the 15 minutes. So I want to show you guys the way the criteria for entry. The 15 minutes. This is the 15 minutes, right? And then, like I said, you always have to evolve. You always have to update your chart. Put those things down, bro. They are no joke. Even if you hear me just say them, maybe I don't say them too serious. I'm not your class teacher, so I can't discipline you. But when the market disciplines you, your capital, I think that's more expensive. So you have to always make sure you're updating your chart. Put your chart up to date. Make sure as the market moves, when it goes like 5, 6 candles, you have to come and adjust the trend line to see if you are current. If you are not current, bro, you know what's up too. So if I was on the chart, we definitely would have connected these lows, right? 1 2, we would have connected this swing point, and then this one connecting these highs as well. So we know that we are looking for more buys, right? Well, we know that here we are expecting. All right, when the market actually left here, we also got our entry. All this place we got entries. There are things we look at to get entries. Look at this level. We have this bullish run. This is a running channel too. So it's a reversal pattern. We are definitely not going to fall victim of looking to keep buying. We're going to sell because we had a retracement candle there. If you haven't watched the retracement candle entry, try to look at it. This is a retracement candle right here, and then after it, you can take your sell and your stop loss above. Then you see the sell, it played out. Then from there, because this is playing out, we had this swing high. So definitely now we can connect the two of them because two touches originates the trend line, right? The trend line is used to connect two swing highs. It used to connect swing point, right? Minimum of two and maximum of none. So when they are already two, when you see the second one is initiated, like it's going down, then you know that here you can draw two of them out. And then when this is also happening, since you have the supportive one, you definitely should have a resistive. Sorry, the resistive one, you should have the supportive one as well. So we have this one here and then do. So we know that we are anticipating a rejection from this end. We are anticipating a rejection from the third touch, and the third touch is always an impactive one. So we know from this inner structure. That's why I said the lower time frame holds more information than the higher time frame. Because if we were on the higher time frame, we would be doing nothing. Because what clearly this pattern is telling us on the 4 hour is that it's a correction, like a choppy market. It's choppy on the 4 hour, but clearly you can see on the 1 hour. This is the 15 minutes. Sorry, you can see on the 15 minute that it's providing money, bro. So like I said, each time the market does what it does, we get what reasons for it. We see before it happens. Once you see them, you can't unsee them. All right. Now, just like this one, I want you guys to put in mind whenever the market is approaching a major trend line, or like whenever we are anticipating a touch for a trend line before we take our decisions, try to notice the market that is going there. Like try to notice the price action that goes there. You see that it is in a way a corrective kind of like a running channel type. If the momentum towards that direction is not a running channel, then the likelihood or likeliness of rejecting is going to be very very low. It's likely not good. It's likely not good to like it's going to invalidate what you are thinking to happen. But if it's giving you a running channel kind of vibe, like it's giving you the momentum is a running channel. Running channel, you guys will know that we have an impulse to a direction and then correcting to that same direction. That is what we call a running channel. It instead of it having the momentum of impulsing, it's just having the momentum of running. It can't impulse. You understand? So now, if you look at the current, I'm now showing you guys the entries, right? So if you look at the current structure we have right here, why the market was here, I wish I could play back, but I don't have the premium, right? I'm using I trade synthetic more, so there's no need of. So if we were settled around here or somewhere not here right now, we would have seen that the market had this impulse, right? You can see the momentum dying and dying around here. So even this can be connected. 1 2, we can definitely, and then we have 1 2. So it seems an expanding kind of correction, and it's also a run channel because this is an impulse to the downside. Then we are having the loss of momentum also to the downside. We know that yes, it is time for us to start looking for the sell, for the the entry for the buys, right? Now this is where I would have taken, or this is what would have originated the buys, like the final trigger. I want to take away the trend lines a little bit away from me so I can show you guys what I'm talking about now. The last video or the last is the last video or the last two videos, there's a video we posted talking about double tops and double bottoms, right? Now this is when, and I spoke about sweeps. There's a difference between when a swing point is being broken and when the swing point is being swept. I think this one will teach more in our community. So if you want to get to understand how we deal with the market, please look in the link in the description below and contact us for proper mentorship. Alright. But we're going to talk about briefly on it here. So we have a sweep. Now this is, there are people or there are traders who are anticipating this to be like one, and then double bottom who will like have their rectangular whatever from here to this, to the base of this guy, right? Because this is the only thing they had. Then they have it like this. So whenever the market come here, they'll try to buy with their stop loss at the week of this candle, and then you can see very well the market swept that place. You can see the market came below it to take stop losses. That is what we also refer to liquidity. That is, now this is the difference between us trading in our community and then other regular trendline users, bro. We use liquidity, we trade alongside liquidity. You have to understand liquidity to know when to stay in the market, when to leave, when to respect your entries and when not to respect them, because definitely when you're on this chart, you have reasons for everything you do, but there are some of them that are invalid. So when you understand liquidity, you get to understand which one is valid, which one isn't valid. You understand? If you don't, ask me in the comment section. So we had this swept, right? Now this came below this guy. Now this is supposed to be, this is supposed to be filtered in the 5 minutes. I don't know if I'm a little bit not too serious with what I'm teaching, but it's just like when you know these things, you can't unknow them. So why do I bother, bro? So this is it, right? Now let's cater for this guy. This was the lowest point. This was the lowest candle, and then that's the candle that gave us the rejection from this trend line. That's the candle that gave us a rejection from this trend line, right? So we started rejecting. Now we know that yes, the pull up is happening. The pull up is happening. We know that yes, the market is actually rejecting the trend line, so we should be looking for buys. Do not enter a trade for like with anticipation, bro. Let the market commence into your direction first. Please note that down, alright? Let the market always commence into your direction before you look for entries. Then you wait for pullbacks so that you can get into a better entry. If you are looking to grab it at the tip, bro, and then you don't understand the proper entry criteria to use, you are going to have problems. Definitely, bro. You're going to have problems. Try to wait for the market to initiate before you have to ride along the market, not the market ride along with you. Right? Now, so we have the market like this. Instead of breaking this high so that we can know that yeah, the structure have been broken, so that we can maybe look for another block or something, like the way we trade in our community, it didn't do that. What it did is that it created a lower high, which was this high is lower than this, right? Since this high is lower than this, we know that liquidity is now settled somewhere, because there are traders who still don't understand other blocks, right? Or who don't understand where to filter the correct one, which one is right, which one is wrong. People, there are traders who don't understand them. So there are definitely people who are. Now let me show you the category of traders who would have been taking trades here. Now this is for double bottom people, right? Double bottom squad. They would have taken the entry when this guy is rejecting. This guy got it high. Still he rejected. They would have bought and put stop loss below. People who trade other blocks. There are people who don't really understand it, and then they will also put their order block here. Last bullish candle before, okay, not even that one, bro. Last bearish candle before the bullish round that broke, whatever. The last bearish candle, which is this. So there are people who would have put their entry here, and then they'll be waiting for the market to tap and keep going up. But the market swept everyone. It swept everyone. Then it swept this low. Immediately swept this low and then closed above it. That is still not the entry for us. We have to wait. You understand? Don't get liquidated, bro. We don't have the money to provide money for market makers. We are supposed to steal from them. I don't want to say that loud. So, bro, now we have this, right? We have this taking out this liquidity. Like, if you want to understand liquidity very well, if you want to understand how we deal with these markets, bro, go to the link in the description. So now we have this low. You see this low is lower than this. So the whole stop losses gathered here have been taken from the market. So the market is now ready to pay people who are patient enough to wait. It's now ready to pay us who understand liquidity. It's now ready to pay us who understand the way we trade, or who knows the entry criteria we use in our community. Now this is a scope for you guys. Now we have the candle that swept the liquidity, right? This is now where we put our limits. On the candle that swept the liquidity, that is where we put our limit. We have this candle going up. It's gone already. We don't know how many of it will form before it comes back to mitigate that same candle that swept the liquidity. But whenever it comes back, that is where we put our entry. So our entry will be on the body of, or the highest point of, for the buys, right? For the highest point of the candle that swept the liquidity, and then stop loss at the lowest point of it. If it's the sell is an opposite, I'm also going to illustrate that for you guys to see. So this is the buy. This is where you are supposed to put our buy entry here. Put our buy limit there, and then the sell limit right here. After this candle is closed and after the second one has launched up. So when the second one is around here, that's where we'll put the limit. Put the limit, and then we know where we are targeting. The first target is the next swing high. Alright? Is the next swing high, because whenever the market gets to a swing high, it does what it wants. So the first target is the next swing high. Now, this is also going to teach you more about where to target and then trade management, because there are traders who just take trade based on the trend line, then they target the next trend line directly. Bro, the market is always dynamic. You have to remember that the market is always dynamic. So each time the market approaches a high, something happens, and you can see clearly as well something is happening right now, because this high wasn't broke. It's not broken yet. It's just swept. Even people, I think if I am to break down this chart, we have sell signals around here. But if you understand our entry criteria and how we manage trade, definitely you have taken profit. And this is 1:2. Yeah, it is small, but it's a win. Do not get rid in the market. Do not. It's just 1:3 already. And then, our people know that we don't really, bro. There are things we don't see in the public. So, bro, this is a win, right? So this is how we take the entry. The candlestick that sweeps the liquidity, the candlestick that takes the liquidity, is the candle we put our entry on. Is if you want to wait for sometime we wait for the half of it, like this. Wait for the half of it like this, and then we get our entry from there. Sometimes we take at the highest point depending on the size of the candle. All right, like this particular candle here, I will not give the signal for a student to take the whole of it. No, it's too much. I would like to take the half of it. So whenever the market comes to mitigate into the candle, that is when the market triggers us into the trade. That's how we get those sniper entries. All right, that's when we get the buy. So that's for the buy. Now let's look out for a sell, and let's be quick so this video don't get boring. All right, now this is a sell, right? We had 1, 2, and then this is the third touch. This is the third touch, right? You already know that from this is the 5 minutes. So like I said, I'll be settling, as I said in the beginning of the video, right? I'll be settling on I'll analyze from the daily to the 5 minute, right? But I will be settling the day trading strategy on the 15 and the 5 minute. All right, on the 15 and the 5 minute. So now we have this nigga rejecting. This candle rejected this, so we know that, yeah, it's time for us to look for sell, because we already understand that the running channel, right? The orange channel is for sellers, right? Sorry, it's a reversal pattern, not for sellers. Though this one here is for sellers because it's running to the upside. So this is a reversal pattern, right? So we have one, two, third touch on the reversal pattern. So we know it's time for us to look for massive sells, right? So immediately you get this rejection candle on the 15 minutes, what you do is to run to the 5 minute to wait for the entry criteria to be met, which is the mitigation of the candle that gave you the signal. So the candle is on the 5 minute. On the 5 minute. If I'm speaking a lot of Latin, bro, go to the link in the description below and contact us. So we have the rejection, I think is 1, 2, and all of this, right? We had the rejection right there, and then where should we put our entry? We should put our entry at the mid for the last bullish candle before before the bearish round, before the last opposite candle before the direction you are wanting to go to. That is going to be your entry. So this is the last opposing candle right here. This bullish guy is the last opposing candle, but for safety I would like to put a stop loss at the top of this rejection candle. This is the candle I rejected, so I like to put a stop loss there, and then my entry will be at the mitigation of this candle. Sometimes, like I said below, we can put it at the half of it for you to get tighter stops, right? Put at the half of it, then that is our entry. You can see how the sniper is. This is the sniper, bro. You see he just came to tap into it, and then directly it went down. Like, you see, look at this. Just look at it. Should I zoom in so you can get to understand what I'm saying? Look at it. This is just the mitigation. They came to it, and then it's only like, this is not even up to 2 pips. How many? You don't. It's just like zero risk trade from there, and then look at how much it dropped, because like I said, next swing point is your target. Your first target is always the swing point. This is a major swing point here that originated the whole of this pattern. So this would have been 1:19 trade, bro. 1:19, and this is today, because I saw this when I was preparing for this video. I saw this signal. This is 1:19, bro, on BTC. Once you understand these things, bro, you cannot unsee them. So you have to always practice. Be on this chart, kill yourself on it, because we did it. So now the sell happening, like I said, you have to always work with the market according to swings, not all on the trend line all the time. Now, based on trend line, we took the buy here, so definitely we have to wait for the market to come here based on trend line, right? But the market is not wanting to go there, so you always have to respect the swings. The swings are the highest, the high and the low, or the support and resistance, if you want to call them that. But make sure like I said, everything in the market works, but it's the way you approach it, like the way you were taught to use it, the way you were taught to deal with them. Everything works, but how are you taught to use it? Now, if this sell going on currently, this is like for people double top, but it's not really preaching the double top. It's preaching the sweep of liquidity, because it only swept this and then closed below. So for retracement candle entry, it's already an entry, because this is a shooting star candle. So you are supposed to sell at the close of it. Where did it close? Here. Supposed to sell here with stop loss above, and then it's dropping. It's not strange. But there are people who took their entry here, because this is the third touch of the trend line, and then we have a retracement candle, and they are waiting for the market to come here, and then now they are in loss, and to be like, shit, bro, the strategy isn't working. Bro, the strategy is working, but you have to understand how to use it. Try to put the blames on you, bro. If you the market don't hit nobody. The market don't know you, don't know your father, don't know. You see what happening? You see what happening on BTC, bro? You see how it's dropping? You see that? God damn it. You see what? So you see the entry is killing, bro. There's no need of preaching BTC anymore, because it just shut my mouth, bro. it just proved my teachings right to you. Liquidity is what moves the market, so you have to understand it. If you don't understand it, then let's look at Euro USD for the last pair, and then we are done. This is just like a recap of the way we literally look at the market, for just have to show you guys some of it. Today we killed Euro USD. I did a lot of trading, a lot of things on Euro USD today, and then you can see for yourself my chart is intact and analyzed. So I'm going to delete all of this thing and show you guys how I came up with all of this, and then you can see there was an entry here, entry there, you see. So let's go to the 24 hour. Let's go to the 24 hour and then show you guys how it's been done. So 24 hour, you already know how we do it. You always look for what the current pattern. The pattern we have here is an impulse to the upside. Then we have in this running channel to the same direction. So we have the highest point of the running channel, then we have the lowest point of the running channel, right? So what the running channel, we know it preaches reversals, right? So we know that, yeah, that means Euro USD is wanting to reverse, wanting to drop, because that's what running channel preaches. So the next thing, we don't connect the trend line here. No, we don't do that because we need it to be more open. We need it to be more open. We need to understand. We need to understand it more before we start plotting our trend lines and stuff. So this is the 4 hour. We go to the 4 hour. We go to the 4 hour. Now, like I said, we just can't plot the trend lines there. If I plotted a trend line there, then I will initiate this. I would have put this whole impulse into my trend line. So what the 4 hour is telling me is I should evolve this guy to this guy and then plot my trend line from here, 1, 2, and then leave it there. I have to leave it here. I'm not supposed to interrupt this because this is giving us a different thing now. You always have to pay attention to this market, bro. Pay attention to this market. Pay attention. Pay attention to this market, bro. Now we have this 1, 2, anticipating the third one. We're supposed to be anticipating the third one, right? But look what the market is doing. Like, that's why I said always make sure that the current is in your head. If you are not up to date, you're going to have problems. This thing is not telling us what this thing is telling us. This impulse and this correction is not telling us what the whole structure is telling us. So let's go to the 1 hour to see. I'm already feeling exhausted. So let's be quick and we can go. Now we have this, so let's not interrupt it. Let's put it right there and also have this here. Now, like I said, try to remember the did I say 10 or the try to always remember me talk about impulsive corrections. All right, now this is an impulse to the upside. We have this correction, right? This is another you see this news, what the news did here. It's what the news did there is clearly now telling you that this whole thing is not one. They are not one anymore. They are not the same. They are two different chart patterns. There are two different chart patterns. This ends here. This impulse and correction, it ends here. And then also have this connected to this. That's it. And then now this is an impulsive correction because it's supposed to be in the impulse, but it has a lot of momentum in it. So it's an impulsive correction. So this is also having this. We're having this for this guy too. This is a different structure of his own. Different structure of his own. And then this structure is preaching the sell. When we get here, it should drop. That's what the current structure is preaching. When we get here, we should look for sell because this is an impulse. We're having a correction, so it should be impulse to the downside, which is a continuation. But you see, this one is preaching impulse here. So according to, if you have to follow this impulse, we have to be looking for buys, right? Because a lot of people have bought here and then they'll be waiting for breakout to continue. But look at what happened, bro. You always have to make sure you're up to date in the market. If I've been talking too much, I'm sorry, but bro, the market is making a lot of things. You have to be up to date. So we have this now. All I have from the 1 hour, from the daily and all of that is just just a reference point, for me to understand where the direction is going. But now my focal point is on this particular current structure I have. So this is the 1 hour. Let's go to the 15 minutes so we can start looking for where to get our trade opportunities and why. Now let's implement the entry I just taught you guys around here. This is now the entry again. Please pay attention if you didn't for the BTC. If you want, go to the video again. So we have this, right? You can see, like I said, the lower time frame holds more information. Now you can see clearly that this is an impulse to the downside. It is not a correction. So this now is the correction of this particular impulsive correction. So now we have that. So we have another impulsive correction to the upside again. After this impulse, we had this impulse to the upside. Then the correction started here. We came back down. So we can clearly connect these two. You can leave it right here, or if you want, you can bring it here. Right? We can clearly connect these two. Yeah, based on the evolving, I'm supposed to take it here because it came He didn't keep going further, so he came back up. So now he came back up, and then even if we took the buy here, or if you use whatever entry criteria, take a buy here, traders will be anticipating dead touch, right? But no, there's no dead touch there. Now this is where I we filtered the first entry from the structure you saw earlier when I switched to USD. Let's use the real line so we can get the accurate high of this structure. This is it. You see the accurate high. Then you can see the market only brought a wick into it. It came inside and then came down to close below. So it's for those who are still anticipating to work only with the trend line, anticipating the third touch. They won't be in this trade, and then probably they would have taken break even or stop loss on their trade because they're already holding buys from here. So you have to understand how to connect the structures with your trend line. The trend line don't work alone. The trend line can't work alone. It can't, bro. So this is now the 5 minute, right? We have a rejection on the 5 minutes from equal highs, right? So we for the 15 minutes. So we go to the 5 minutes for the entry. Like I said, I'm now teaching the entry. I might not sound serious, but I'm saying a lot of things, bro. Somebody just commented in one of the videos that my teaching are underrated, and that's it because I don't know, bro. But if you put your ears to these things, you will know that your career is going to be changed. So this is it. The candle that swept. This is the candle that swept the structure, right? This candle. Then we just have to drag it because now this is the 5 minute, right? So the first candle that came after is the bullish one. We ran play around. Then we put our limit at the beginning of it, and then stop loss at the end of it. Then when this candle opened and then came down into it, that's when we attacked into the trade. So we attacked into that trade. That is the single candle mitigation entry. We're tagged into that trade. When the candle that takes your liquidity is your entry candle, but you don't initiate the entry immediately it closes. You have to let the market launch into the direction first. Then you now set that candle that swept liquidity as your entry. That is the secret entry criteria, bro. You can see how tight the entry, the stop will be, like the risk will be so tight, and then your target will be a lot of money, bro. So we had the entry right there. We have the entry right there. Sorry. We have the entry right there. Stop above the candle, right? And then the first target is what? Swing point. This is the first swing point and the 90% of this. And it's already 1:8 from there. And then the next swing point is the initials that originated the whole pattern. So that is 1:14. And that was a kill. That is today's trade as well. You understand? That was today's signal too. So from there, the market keep playing around, giving us structures. Now, like I said, whenever the market is approaching a major structure, it gives you that running channel vibe so that you can know that yes, something is going to happen. A reversal is going to happen or a continuation is going to happen. So we have this here. You see this? See this correction? We're having this kind of wave. You see, the momentum is not high. We're having this kind of pattern here. Now, this is another one, another sweep, another entry again. We have another sweep here. This is the 5 minutes. Let's go to the 15 minutes. That's where you spot the sweep. Like I said, we will analyze from the daily as usual, but we come to the 15 and 5 minutes to tell you how we do the trading. You analyze the sweep as usual, and then from the 5 minutes. So this is the low. This one, the sweep is so clear and significant. This is the low, right? This is the low. You see, so it was swept. This candle swept it, and then you go to the 5 minutes. This place is a little bit tricky because the market, instead of mitigating the candle, it kept sweeping the candle, and the last candle that swept, it did not mitigate. So that is where they tell you no strategy is what 100%. So for this, most likely you are taking a loss because because when this candle rejected, we are supposed to let the other one play. Okay, we wouldn't have even taken the trade. Now we will have taken the trade. Let's see something else. So this is now the 5 minutes of that, and then if you look at this, we have this little impulse here. Then we have 1, 2, and then 3, right? We're having 1, 2, 3 structure here. Then we have another pattern here as well. So this pattern is telling you clear that yeah, we need to look for buys to bring us up to the whole thing. But you see clearly that there's a lot of
manipulations here. So we have this rejection, we have this pink candle again. So I think after the close of this, I personally would have initiated this, and my stop loss would have been taken for this trade because it gave me reasons to buy. Though that's why they said no strategy is 100%. You understand? So that would have been a loss. But you always need to respect your trading plan. That is what makes you the trader, because you definitely will take loss, but with your trading plan, you take once in a while losses. Alright. So this is now another one. We have a running channel to the upside, 1 2 3. Then we also can connect this, right? Then the last candle, the candle that originated the drop is this. You see this bearish one. So we use that candle as uh, the candle for entry, right, and the stop. So wait for the market to just come and mitigate that. You see, came down, came back to mitigate, and then it keep dropping. The entry is here, the stop is above, which is the highest point. And then look at it, bro. It's down. It's down, man. It's down. The market is always repeating the same stuff. So you have to understand these things, bro. Thanks for watching, my friends. Thanks for watching. And this is our last video for the year. If you enjoy the content, don't forget to like, don't forget to subscribe, and don't forget to leave us your comment, bro. Say something. Say it in the comment section, alright? If I was saying rubbish, say it in the comment section. If you enjoy the content, tell us in the comment section. Thanks for watching.